So, what just happened? On April 8th, the market went absolutely wild with its biggest rally in over a year. A huge wave of optimism sent stocks through the roof. But here's the thing. That entire rally is built on something that could totally fall apart in just a matter of days. We're going to break down exactly what lit this fire and why this big party might be hanging by a very, very thin thread.
Okay, let's just put this number into perspective. The Dow Jones shot up 2.85%. That was its best single day in more than a year. A truly massive move that had all of Wall Street buzzing.
And listen, it wasn't just the Dow. This was a classic, a rising tide lifts all boats kind of day. The Nasdaq jumped 2.8%, the S&P 500 was up 2.5%. The entire market just breathed this collective sigh of relief. But relief from what exactly?
And that brings us to the two big questions we're tackling in this explainer. First, what on earth sparked this incredible surge? And second, and this is the one you really need to pay attention to, why is this whole celebration maybe, just maybe, a little premature?
The answer comes down to a single piece of news from the world of geopolitics. News that completely flipped the script for the market in just a few hours. The catalyst was a sudden, and for a lot of people, a completely unexpected truce.
Just hours before what looked like a critical deadline, boom, the U.S. and Iran announced a temporary 2-week ceasefire. This deal, with Pakistan playing the middleman, basically hit the pause button on a conflict that investors were terrified could spiral out of control and just choke off the world's energy supply.
Now, the language here is absolutely crucial. The American side came with a huge condition, the immediate reopening of the Strait of Hormuz. We're talking about one of the most vital arteries for oil on the entire planet. So this wasn't just, hey, let's stop shooting. It was about getting global trade, the lifeblood of the economy, flowing again, right now.
And the market's reaction? It was instant and it was dramatic. The price of crude oil just plummeted by nearly 15%. For a market that was petrified of an oil shock sending inflation into the stratosphere, this was pretty much the best news it could have possibly gotten.
But here we go. This is where we get to the heart of the problem, the reason this rally is so treacherous. You have to understand the difference between a ceasefire and peace. They are not the same thing. They're not even in the same ballpark.
So think of it this way. A ceasefire is just a pause button. It's a temporary, fragile agreement to stop shooting for a little while. Peace, on the other hand, that's a formal treaty. That's a resolution. It's a lasting end to the fight. The market celebrated like we got peace, when all we really got was a very temporary, very fragile pause.
And this right here illustrates the real-world difference perfectly. Under the ceasefire, Iran says it will allow ships to pass safely, but only with the coordination of its military. What that means is a ship's captain has to basically ask for permission, sailing on a knife's edge, totally dependent on the goodwill of an adversary. But under a real peace treaty, you'd have internationally guaranteed freedom of navigation, no permission needed. The risk levels are just night and day.
And guess what? The cracks are already showing. Almost immediately, Iran's parliament speaker came out and claimed the agreement had already been violated, talking about things like drone flights and other attacks in the region. That is not the kind of language you hear when an agreement is stable.
This brings us to the VIX, which is basically Wall Street's fear index. Despite that euphoric rally, look where it's sitting, 21.04. Now, professional traders see anything above 20 as a major warning sign. It tells you that even as stocks were soaring, the smart money was out there buying insurance, betting that the chaos could come roaring back at any moment. So all this leaves us at a major crossroads with two completely different futures for the market. And over the next couple of weeks, the path we go down depends entirely on whether this fragile truce actually holds or if it completely shatters.
So here they are, the two potential outcomes, laid out side by side. On one side, you have a path toward peace and a strong market. On the other, a return to conflict and a potential market collapse. Let's break them down.
All right, scenario A. This is the best case, the bull case. The ceasefire holds, it turns into a more durable agreement, oil prices settle down in the $80 range, and inflation fears fade away. This gives the Federal Reserve the green light to start cutting interest rates again, which, as you know, is basically rocket fuel for stocks.
But then there's scenario B, the nightmare scenario. The talks collapse, the fighting starts up again, and the Strait of Hormuz gets shut down. Oil doesn't just go up, it surges past $110 a barrel. Inflation spikes, and the Fed? Forget about cutting rates. It might be forced to actually start hiking them to fight it. And that rally we just saw, it would get erased in a flash.
So, with these two completely different futures hanging in the balance, what are the specific things we should all be watching over the next few days?
Here are the immediate risks. First, a total collapse of the ceasefire. That could be triggered by the ongoing fight between Israel and Hezbollah, which, by the way, is not covered by this truce. Second, you have to listen for any hint from the Fed that they're shifting back toward rate hikes. And finally, watch the bond market. It often sniffs out trouble before the stock market does.
And this all comes to a head this weekend. A U.S. delegation is heading to Islamabad to start the formal talks. The headlines that come out of that meeting will be the single biggest driver for the market, period. So the final question is this. Was this week's historic rally the start of a new bull run, or was it just a dangerous head fake in a market that's still staring into the abyss? The next 2 weeks are going to tell the tale.